Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today we have reached on our 7th chapter, that is depreciation, provision and reserves. Provision and reserves, we'll talk about it later. Right now I am going to focus mainly about depreciation. Okay, now when we take the literal meaning of depreciation, you have heard that this thing has depreciated. Okay, we have heard two terms, depreciation and appreciation. Appreciation, something whose value increases over a period of time. Likewise, when we talk about land, okay, people invest in land because they know that over a period of time the value of land is going to increase, right? You have to remember this for accounting purpose also, that the value of land never depreciates. Okay, similarly, people invest in gold because they know that the gold value will increase over a period of time. Daily fluctuations will happen, but the gold that you bought 10 years back will be of less value as compared to the today's value. So that is appreciation. But there are certain things which you buy today, even the next moment, if you just got it today, if you bought a let's say Activa today, got it home, and on the very next day if you go and sell it, its value depreciates. Okay, you won't get the same price for which you paid for that Activa, right? So similarly, when the organization it starts its business, right, the business that they are running, for that they need certain things. Okay, they need to run that business in a particular building. For that they need furniture, fixtures. To run an organization, they need to invest in certain plant and machinery. They need certain motor vehicles. So like we have discussed about generally accepted accounting principles, and for this depreciation you need to understand two concepts. You have already gone through those concepts, but these two concepts, one is matching concept and another one is going concern concept. Okay, when I say going concern, when the organization starts its business, it starts with a purpose that the organization is going to run for a period of time. Okay, it's not that for a particular 1 month only purpose they are going to run this organization. So they start with an intention that this organization is going to run over a period of time. So for that we apply a going concern concept. Okay, so when they are investing in certain things, when they are buying their assets, liabilities, we have gone through it. Okay, and if you want to know about it, you can go through my previous videos. Right now, when I say about the assets, when the organization is investing on certain assets to run its business, that asset they can't just consider it as an expense for that particular period. They are going to use that asset. If you are if you are buying a mobile phone, okay, or if your family is buying certain furniture, doesn't mean that they are buying that for that particular period only. They are going to use it over a period of time, right? Similarly, when an organization is buying a building and running its organization over there, when they are buying a plant and machinery to carry out its production process, that machinery they are going to use it for a period of time. So there they apply the going concern concept, right? So the price that they pay for that machinery, they capitalized it. Okay, if I am buying a machinery worth rupees 5 lakh, I can't charge 5 lakh as an expense for that particular year only. Okay, this machinery I am going to use it for a period, for its useful life, that useful life I'm going to use that machinery. So what I do, I capitalize the whole expenditure, right? And then if I'm using that machinery for my business for that year and I'm generating revenue, right, what the business do, they generate revenue and they incur expenses. So because of that machinery, if I am generating a revenue, I need to consider that portion of it as an expense. Okay, Why I say matching concept? Because for that particular year, the revenue which you have earned because of a certain particular asset, you need to consider that, you need to match it with the expense of that particular year. So when I am buying a machinery of 5 lakh rupees, that year, I have used that machinery, and that machinery has helped me to generate a revenue, so I will consider that part, as an expense. I will match the cost, the expense, with that particular year's revenue, right? So that cost, that the one that I am considering as a expense, is known as what? It is known as depreciation. Okay, my machinery which I have used for that year, and I am, will use it for a particular period of time. I'm not going to capitalize it for that particular year. I have used it, and I am going to charge it as an expense, and that is known as depreciation. Similarly, there are certain other things like depreciation. There's two other terminologies like amortization and depletion. Depreciation relates to the tangible assets which we can see, which we can touch. Amortization relates to intangible assets, goodwill, patent, trademark, copyright. Depletion relates to the natural resources, wherein the business is in the business of mines and quarries. So what are all these? That too I have explained in my previous video. You can check it out, right? Today I am going to talk about what is depreciation and these 4 parts. Okay, right? Methods of calculating depreciation, method of recording depreciation, disposal of assets, and effect of any addition or extension to the existing asset. Okay, now depreciation, we got to know we are using a certain machinery. Even though if we are not using a certain machinery, that machinery is still in the organization, we have purchased it, we are not using it, its value is going to reduce. Okay, let's say if you buy any motor vehicle, any bike. Okay, you buy a bike, if you keep it for an year in your house and you don't use it, like the machine will not work. Okay, you have to use that machine for to be in a working condition, right? So even if you don't use it, its value depreciate. So if you are using it, because of the wear and tear, the value depreciate. If you are not using it, if you have just keep it idle, but after a period of time the machine will not work properly, it may get rusted, or the functioning won't do properly, you have to get it repaired. So it's, even though you sell it, the bike which you purchased it, and you are going to keep it for a year, you didn't use it at all for a year also, its value is going to depreciate. You can't get the same amount for a new bike, right? And thirdly, the technology is changing, right? If I'm purchasing a mobile phone today, the next in a few months some new technology will come and it will take over the old technology. So because of the technological changes also, the value of the asset will depreciate, right? Now if the value is depreciating and they are giving it generating revenue, we will charge it as a depreciation for that particular current year. It's a non-cash expense. We are not giving a cash to anyone for depreciation, but we are considering it is as a non-cash expense, and we will charge it as an expense for the current year, right? Now for calculating depreciation, before we go to like how to calculate, what are the methods of calculating depreciation, first we should know on what we have to calculate, right? The first thing we should know is about cost of asset. Now what does the cost of asset mean? On the asset we are going to judge. Okay, what is its cost? What that cost includes the price that you pay to buy that machinery. Okay, that is the original price you paid, okay, to buy that machinery. You got that machinery from one premises, from that vendor to your place. Okay, how you got it? From, you must have, you know, booked certain transport, right? You paid for that transportation charges, so it includes transportation charges. Okay, now there are certain times that we pay insurance also for it. Okay, if anything in the transit happen to that machinery, we can claim that amount, right? So the insurance amount that we paid is also considered transit insurance. Okay, and when the machinery come over here, that vendor, some person will come and install that machinery into your building. Okay, when the person is installing that machinery, he is going to charge you certain amount. So the installation charges, so all these things are considered as the cost of asset, right? This is whole the cost. We will consider it, we will add it, and then we will get to know the cost of the asset. Okay, and on that we are going to charge depreciation. But like, if I know after a period of time, like after 5 years or after 10 years, if I sell it to a scrap dealer, right, this machinery, he is going to pay me certain amount. That is just an estimation based, right? If I go and take this machinery to any scrap dealer, he will give me a certain amount, that is its scrap value I am going to receive. Okay, now this scrap value, what I need to do, I need to deduct it, because I am going to get that much amount of money, so I can't charge it as an expense for myself. Okay, this is the scrap value which I am going to get, right? Now machinery come over here. Okay, I am having that machinery, I use that machinery. After 10 years I am going to sell that machinery to a scrap dealer. Now machinery when come over here, I have to take that machinery over there also to the scrap dealer, right? For that also I need to pay the transportation charges. Okay, it can't go, I can't take the machinery in my hand and take it over there. Okay, so for that also I need to pay the transportation charges, or any expense I need to incur to, you know, to sell that, to give it to the scrap dealer. So I need to deduct that amount, any of the expenses incurred. Okay, to, you know, give it to the scrap dealer. So what I will get to know, I will get to know the net realizable value. Let's take one example. Let's say I purchased a machinery worth rupees 1 lakh. Okay, let me do it over here. 1 lakh worth of machinery I purchased. Here I am calculating the cost of asset, right? 1 lakh machinery I purchased. For transaction I paid rupees 5,000, right? I paid a transit insurance of, let's say, 3,000. Okay, and I paid an installation charges of rupees 12,000. So the cost of asset for me is how much? 1 lakh plus 5,000 plus 3,000 plus 12,000, that is equal to 1 lakh 20,000. Right? Now you got to know the cost of asset. Now I know if I sell this particular machinery, I am going to receive, here I will calculate the net realizable value, and RV is net realizable value. So I know if I sell this machinery, I am going to receive 25,000. Okay, I'm going to get 25,000, but I have to pay for the transportation from my building. I need to take to the scrap dealer, so he is going to again charge me, let's say, 5,000. So my net realizable value is how much? 20,000. Okay, this much amount I am going to receive. So this much amount I am going to deduct from my cost, and what I will be having, what is this amount? This amount is known as depreciable cost. 1 lakh rupees, right? Now this is the price of, this is the value on which depreciation will be calculated. Okay, now how to calculate depreciation? There are two methods. Okay, one is straight line method and one is written down value method. Wait, let me just tell you, I need to also know the useful life of asset, which will help me in calculating. These are the things which I need to know. Okay, what is the useful life of assets? Let's say it is 10 years. For 10 years I am going to use that particular machinery. After that 10 years that machinery will not be of any use to me, even though it is in a working condition, right? Even though it's not like that, it's not, it won't be in a working condition, but as per certain policies, as per certain rules, I can't use it for more than 10 years, or else even if I use it for more than 10 years, it's going to, it's, you know, repairs and maintenance expenses will keep on increasing. Let's say I got a mobile phone, I was having OnePlus 6, right? I purchased it for 36,000. Then after a period of time it was working smoothly, properly, no issues, but slowly what happened? The screen was not working. I got the screen changed. Then the fingerprint to open the lock stopped working. I said, okay, let me continue with it, I'll keep a password for it. After a point of time, what happened? The camera stopped working. I took it, I got it repaired, but still after a period of time, still it stopped working. So what happened? Any machinery, after a period of time you can't use it, its repair expenses will keep on increasing, so it will be a burden for the organization. So for like the useful life, we can use it and we can depreciate it, we can get a certain amount if we sell to the scrap dealer. So the useful life is, let's say, 10 years. Okay, now we will know what are the methods by what we will calculate the depreciation amount, how we will get to know the depreciation amount. So this is our first part. Right now I'll discuss this, then this, third and fourth. These are the 4 parts in which I have divided this particular chapter, depreciation. So the first part is methods of calculating depreciation. So there are 2 methods. Straight line method, this is the name. SLM is straight line method, and another word is written down value method, which is also called as reducing balance method. Okay, I know it's still confusing, but you will get to know easily. Okay, now let's say straight line method. Straight line, why it is named as straight line? Because every year for 10 years the value of depreciation will be same. Okay, so when you plot the depreciation amount on a graph, first year let's say 10,000, second year 10,000, third year 10,000. So when you plot it on a graph, the line will be straight. Okay, that is why it is known as straight line method. Now what we do in straight line method, what we need the cost of asset, we need the net realizable in both. Okay, cost is known, net realizable value is known, the useful life of asset, we get to know the depreciable cost. What we do? Cost minus NRV. Now this is also getting depreciated, right? It's not working properly. Its life is done. So cost minus NRV divided by the useful life of asset. Okay, what is the cost? Cost is 1 lakh. This is the depreciable cost. We already deducted cost minus NRV. 1,20,000 is the cost. NRV is 20,000. 1 lakh is my depreciable cost. Divided by useful life. How much is the useful life? 10 years. So what is the amount of depreciation? 10,000 rupees. Okay, this is the depreciation which we are going to charge for 10 years. 10,000 rupees every year, 10,000 for the next 10 years we are going to charge. Okay, this is straight line method, simple, easy. Okay, you got to know, right? The next is written down value method or reducing balance method. Now when I say written down value, let's say I got to know that the rate of depreciation, what you will be given over here, the rate of depreciation every year 10% will get depreciated, right? So when I say the rate of depreciation is 10%, okay, now the first year, this is my cost, depreciable cost, rate of depreciation is 10%, that means 10,000 will be charged as a depreciation, right? I will charge it depreciation 10,000. What I get? 1 lakh minus 10,000, that is 90,000, right? On 90,000 again 10% will be charged. Okay, what I'll get? 9,000. Now what is the cost depreciable? What is the value of my asset in the third year? 81,000, right? On 81,000 for the full year I use that, 10% will be charged. 8,100 is the depreciation amount for the third year. Now what is the value? 72,900. Then 10%, that is 7,290. So this is how every year, in this case, in straight line method, same rate of depreciation was charged, right? But in the written down value method, what we are charging every year, the value of machinery is reducing. Every year the value on the written down value we are charging depreciation. 1 lakh on that I use that machinery, it gave me a good result for that particular year. I used it for more purpose, so the depreciation amount will also be more, right? So 10% I used it, 10,000 rupees. Next year the written down value is 90,000. That is why the term is written down value, right? So written down value is 90,000. On 90,000 I charged 10%. 9,000 came. The value of depreciation reduces, right? I'm coming to that second term also, reducing balance method, okay, RBM. Here the value of depreciation is reducing, okay, so that is why it is called as reducing balance method. 10,000, then 9,000. On the written down value 81,000 I charge 10%, it is 8,100. Similarly here it is 7,290. So here when you will see the rate of amount of depreciation is reducing and we are charging it on the written down value, okay, so that is why it is known as a written down value method or reducing balance method, right? So these are the two methods of depreciation to calculate on the asset, right? This is clear. It's just need to keep in mind, if the asset is being used for the full year, right, we will charge the whole amount 10,000. If the asset is being used for a particular period, it's not necessary that I purchase the asset on 1st April only. Maybe I purchased it in the month of October, maybe I purchased it in the month of July, maybe I purchased it in the month of January. So the asset is being used for that particular period only. If I'm using it for 6 months, let's say, so the 10,000 will not be charged. I can't charge the whole year's depreciation amount. I am using it for half of the year, so this value will get reduced to 5,000, okay, in both the cases. Next year obviously for the full year you are using it, so it will be charged as 10,000. But in this case, let's say I purchase in the month of October, I'm using it for 6 months, so I will charge depreciation for 6 months, okay. From next year it will come back again to 10,000. In this case it value reduces, so on that basis we will calculate the rate of depreciation, okay. So the first part I think was very easy, two methods, SLM and WDV. Why SLM? Because the rate of depreciation is same every year. Why written down value method? Because on the written down amount we are calculating the rate of on the basis of rate of depreciation we are calculating the amount of depreciation, or reducing balance method. Okay, now the second part we are going to discuss about is method of recording, how we will record the depreciation in our books. Okay, now how we know how to calculate depreciation, right? Now we need to record that depreciation amount in our books. How to record it? There are two ways. One way, you charge it as to your asset account. How we will pass the entry, I'll let you know. Let's take the previous example wherein I purchased a machinery for 1,20,000. Okay, NRV, this is the cost. NRV is 20,000. Okay, 1 lakh is my depreciable cost, and useful life is 10 years. Okay, useful life is 10 years. For to make it easy, let's consider it as a SLM, or we can say whichever, WDV or SLM, whichever, right? Let's say WDV method. Now let's say I purchased a machinery, I paid to my vendor 1,20,000. So when I'm purchasing a machinery, what will be the entry? Let's say on 1st April I purchased a machinery. My journal entry will be machinery account debit 1,20,000. This you need to understand, 1,20,000, because you are paying 1,20,000. This is for calculating. Why we are considering net realizable value? To calculate the amount of depreciation. We have not yet received that 20,000. Okay, but when we are calculating depreciation amount, we need to deduct the net realizable value. But when we are recording, we need to record the full amount, whatever amount we have paid to make that machinery in use for our business. The whole amount we need to consider. We are not supposed to consider the depreciable cost, right? So 1,20,000 we need to record it to bank, or else if I am buying it on credit, so to bank or vendor account 1,20,000. Okay, this is what I paid. Okay, machine come into my business, it's an asset, machinery account debit, cash goes like the check amount I paid, or I created a creditor, so I credit that creditor's account, or else I'm paying money to it through check, my bank amount reduces, I will credit it. So machinery account debit to bank account 1,20,000. This I purchased it on 1st April. To make it to simplify it, let's consider on 1st April. Now I use that machinery when depreciation amount is charged at the end of the year. At the end of the financial year, we will charge depreciation. Okay, so on 31st of March, okay, I'll close my books, so I need to charge the depreciation amount. I'm considering it as a WDV method. 10% is the rate of depreciation, right? So on 1 lakh, 10% will be how much? 10,000. Okay, so depreciation is an expense, current year expense, depreciation account debit 10,000. What I am doing, the value of machinery reduces, right? I will credit machinery account. $10,000, right? One entry will be this, and now depreciation account I have opened, all the expenses, all the income account, we need to close it. Where we need to transfer it? We need to transfer it to our profit and loss account, right? So this is an expense. Where we will do it? We need to close the depreciation account on 31st March. My next entry will be profit and loss account debit. It's an expense. debit, I transfer the expenses in the profit and loss account 10,000, and I will close the depreciation account 10,000. Okay, this are going to be my entries every year. Like this is the first entry, I purchased a machinery. I'm not going to make that same entry again. This is a one time purchase. I purchased it, machinery account debit to bank of vendor account 1,20,000. Here I charged the depreciation to the asset account. Okay, I reduced the value of my machinery. Okay, so I credited machinery account, depreciation account debit to machinery account. These two entries I will pass every year for next 10 years. These two entries I'm going to pass every year, because every year I'm going to use that asset. I charge it as a depreciation, consider it as an expense, and I will charge it against the asset, so to machinery account. And the next entry will be, I will close the depreciation account and I will transfer that expenses to the profit and loss account. So profit and loss account debit to depreciation account. So this is how my machinery account will look. Let's say machinery account, I do the ledger posting. This is how the machinery account will be. I purchased to bank account 1,20,000. Okay, I charged depreciation at the end of every year. So by depreciation account 10,000, by balance carried down will be 1,10,000. Okay, 120. Next year my machinery balance will be, to balance brought down is 1,10,000. Okay, now I have to charge depreciation. What will be the amount of depreciation? Am I going to charge on 1,10,000? No, not on this. This is the balance which I am going to carry it down. 120 cost, salvage value 20,000, 1 lakh is the depreciable cost. At the rate of 10%, I charge 10,000 in the first year. Okay, so written down value is 90,000. On 90,000, I will charge 10%, that is 9,000. Okay, 81,000. This is the working that you have to do in your notes. Working are very important. First you need to do these workings, right? So here my depreciation amount will be how much for the next year? It will be 9,000, right? And I'll carry down the balance by balance carried down. 110 minus 9 is 1,01,000. Okay, this is how I'm going to show the machinery account. Depreciation account, open it. Depreciation account, you will open it. You will charge every year. Depreciation is an expense. You will charge it against machinery. So to machinery account 10,000, and you will transfer it by closing it to P&L account 10,000. Okay, this will get closed again next end of the year, next year, to machinery account 9,000 by P&L account 9,000. This account again will get closed. Third year, to machinery account 81,000. 10% of 81,000 is 8,100 by profit and loss account 8,100. So this is how you are going to prepare your depreciation account and machinery account. For that, this working is very much important, right? What I did in this, I charged the depreciation to the asset account. Every year my asset, I am going to show it at a reduced amount, because I am charging depreciation to the asset account. The next one is creating provision for depreciation account or accumulated depreciation account. We will open a new account, right? wherein every year whatever depreciation we have provided, we will transfer it to that particular account, right? What will be the entry? The first entry will be the same. Machinery, you purchased a machinery account debit to bank or vendor account 1,20,000. What will be the next entry instead of to machinery account? First year depreciation amount is 10,000. Your entry will be same. At the end of the year, you will charge depreciation account debit 10,000 to, instead of machinery, what we will write? Provision for depreciation account. We will not charge it against an asset. We will create another account which is known as provision for depreciation account, which means the asset will always be shown at its original cost, at the original price at which they purchased an asset, right? Okay, so asset will always be shown on the asset side as 1,20,000. We are creating a next account, provision for depreciation, where it will be shown, I will tell you. Second entry will be depreciation account debit 10,000 to provision for depreciation account. Depreciation account, again we will close it, transfer it to profit and loss account. Profit and loss account debit to depreciation account. Now where we are going to record this provision for depreciation, there are two options. Here I am having assets, here I am having liabilities. Okay, assets, machinery, I will show it as 1,20,000, right? And on the liability side, after my capital, I am going to show provision for depreciation 10,000 rupees. This is the first effect that we are going to give. There are two options. Machinery 120, on the liability side show it as provision for depreciation 10,000, or else the second effect could be in the inner column show machinery 120 less provision for depreciation 10,000. So on the outer column I will show my machinery as 1,10,000. Right, this is how I am going to give the effects, right? In the books the machinery will always be at 120, and I have opened another account, provision for depreciation account. In that all the depreciation will get accumulated. I will show you. This is how my provision for depreciation account will look like, right? Provision for depreciation. Okay, depreciation account debit, instead of machinery account I'll show provision for depreciation account. Okay, or else we can say accumulated depreciation account debit to provision for depreciation account. We debited depreciation account. On the credit side we are going to show by depreciation account 10,000. This is the balance we will carry down every year, and this is how my depreciation will get accumulated. So 10,000. Next year again there is a depreciation of 9,000. Next year I'll pass an entry, depreciation account debit to provision for depreciation account 9,000. So on the here I will say provision for depreciation account 9,000, and here it will be by depreciation account 9,000. This is by balance carried down 10,000. So my accumulated depreciation is 19,000. Okay, this is the balance. I will do balance carried down. This is brought down 19,000. Okay, in my liability side I am going to show 19,000 in the next year as provision for depreciation, or else I will deduct from 120 19,000, right? Next year again by balance brought down is 19,000. Okay, Same, next entry, next year depreciation amount will be 8100. I will charge that depreciation to provision for depreciation account. So depreciation account debit to provision for depreciation account 8100, 27,100, and this is the balance that I will carry down, 27,100, and this is what I'm going to show it in the third year. Provision for depreciation 27,100, machinery will be 120, no effects to be given. I need to carry forward the balances every year. The machinery will be 120, next year I will deduct 27,100. So this is how we are going to calculate, how we will record it, how we will calculate it. We discussed how we are going to record that depreciation amount in the books, how we are going to show them. In this way, either we can create, charge the depreciation to the asset account, or else we can create a provision for depreciation account, or that is known as accumulated depreciation account also. Just remember, your working should be better, right? Here I have considered only one machinery. Let's say in the next year or in the same year I purchased a new machinery. Okay, now that is confusing. Okay, I purchased a machinery worth rupees 1,20,000 in the first year. After 6 months I am purchasing another machinery. Now workings, what you need to do better, it would be better if you show the workings this is way: machinery 1, machinery 2. Okay, same year you have purchased, write its purchase price, deduct its net realizable value, you will get your depreciable cost. For the first machinery you will charge depreciation for the full year, and in the mid of the year, if you are purchasing a machinery, you will charge depreciation for the mid of the year for 6 months and add that amount and then show it. So this is important. If you will calculate it in the same format, then it's very confusing. There is a possibility that you buy the third machinery also, right? So the third machinery, prepare that separate asset account. Okay, this particular asset you have, when you have purchased it, what's its NRV and what is the date of depreciation you are going to charge. Second machinery, what is its when you have purchased it. So if it is for 3 months you have used it, if it's in the month of January you have purchased it, you have to charge on the second machinery for 3 months. From the next year it will be for the whole year, but for the second machinery it will be for 3 months, and for this first machinery it will be for full year. Okay, so this is how we will record the depreciation in our books. The third part that we are going to discuss about is disposal of asset. Okay, so the third part that we are going to talk about is disposal of asset, right? We purchased an asset. That asset's useful life is over. Now what we need to do? We need to dispose it of. Or maybe some unforeseen circumstances happened, or something happened with the machinery, it's not working, and we thought of disposing of the machinery. So what will be its effect in our books? Let's take the previous example where I purchased a machinery of 1,20,000, right? Its net realizable value is 20,000. That is the scrap value that I'm expecting that I'll get after its useful life. Okay, so depreciable cost is how much? 1 lakh rupees. Let's say its useful life is 5 years. So as per SLM method, right? I am here taking the SLM method. So the depreciation amount will be how much? 20,000 every year, 20,000 rupees every year for 5 years. Now at the end of the 5th year, I sold that machinery and I got rupees 25,000, right? Now what I need to make? I need to make my machinery account. In machinery account, I will show my machinery at what price. For 4 years, 5 years I am using that machinery. At the end of the 5th year I am going to sell it. Okay, so on the 5th year, what will be the balance on 1st April? Okay, on 1st April, what will be the balance that I will carry it down? 120, I will deduct 20,000 every year, right, for the 4 years. So what will be the balance that I will carry it down on the 5th year? 40,000, right? This much will be the balance. Now I sell that particular machinery. Okay, before that I need to charge depreciation, and the 5th year I used that machinery, so I need to charge that depreciation. So on 31st of March, by depreciation account, how much it will be? 20,000, right? Now I sold that machinery for 25,000. What will be the entry? I got money, bank account debit, and the machinery went out from the business, so the asset reduces, so to machinery account, right? So bank account debit to machinery account, by bank account I got 25,000. okay, what was the value of my machinery? Now, like at the end of the year, the value of machinery was 20,000, because 40,000 was the value at the starting of the year. 20,000 I deduct depreciation, so at the end of the year the value of machinery was 20,000, right? But how much I got when I went actually to sell it to the scrap dealer? 25,000. So what is 5,000 for me? This is profit on the sale of machinery, right? 5,000 is the profit that I earned on selling that machinery. Where I need to carry that profit? To the profit and loss account. What will be my entry? Machinery account debit to profit and loss account. Okay, so here on 31st of March, machinery account debit to profit and loss account 5,000, and this machinery account will close. Okay, now try to understand debit balance. This is debit side, this is credit side. If it is having a debit balance means debit side is more as compared to the credit side. That means we are incurring a loss. Let's say here the value is 50,000, here it is 45,000, so 5,000 would have been a loss for me. Simple, better do the working. But if at all you want to know, 40,000 instead of 50,000, the debit side is more as compared to the credit side. There is a debit balance, that means there is a loss on sale of machinery. If it is having a credit balance, means credit side is more as compared to the debit side, that means there is a profit on sale of machinery, right? Simple example. Similarly, if you are creating provision for depreciation, what will be the amount here? It will be 1,20,000, right? The full amount, right? You have created a provision for depreciation, you will close that provision for depreciation account. What will be the entry? Provision for the 5 years, whatever provision you have created. So provision for depreciation account debit to machinery account. So here it will come provision for depreciation account. How much provision you have created for 5 years? 80,000, right? Oh, sorry, 1 lakh. For 5 years, not for 4 years. For 5 years, current year also provision for depreciation you transferred. So for 5 years, how much was the depreciation? 1 lakh rupees. This is how you will show how asset is being sold. On the profit or loss, we will transfer that profit and loss on the sale of machinery or any asset to P&L account, right? This was quite simpler. Next I am going to talk about is the asset disposal account. Asset disposal account. What is asset disposal account? I'll show you. Okay, so we studied about disposal of asset, right? We disposed of the asset. There was one machinery, we disposed it of, we gain profit or we will incur a loss, and whatever profit or loss we are gaining or incurring, we will transfer it to profit and loss account. But that is not the case in the organization, right? There are multiple things they are purchasing, right? Multiple machinery at different point of time they are purchasing. They're getting their building constructed at different point of time. So there are multiple things they are purchasing and then they are selling it. So to ease it off, what is to be done? They prepare a asset disposal account. Whichever asset they are disposing it off, they transfer that asset to that particular account so that it become easy also, right? Now let me explain you with an example. So this is the example. There are three machineries. First machinery was purchased on 1st of April 2020 for rupees 1 lakh. Second machinery, same year but different date, that is 1st October 2020 for 80,000. Third machinery, again on a different date but in the same year, 1st of January 2021. Sorry, I missed a mistake. January 2021. So it was purchased for rupees 60,000, right? Depreciation will be charged at the rate of 10% as per straight line method. Okay. Then the machinery was sold. The first machinery was sold. The first machinery purchased on 1st April 2020 for rupees 1 lakh was sold on 1st October 2022 for rupees 72,000. Right. The second machinery was sold. Second machinery purchased on 1st October 2020 for rupees 80,000 was sold on 31st of March 2023 for rupees 65,000. And there was also a purchase of another machinery that I have named as a fourth machinery, which was purchased on 1st of April 2022 in the same year 22-23 for rupees 75,000. Now on all these four machinery, depreciation is charged at the rate 10% as per SLM basis. Okay, that means, let me ease it out. What will be the rate of depreciation for first machinery? 10,000. Second machinery at the rate of 10% will be 8,000. Third machinery it will be 6,000, and the fourth machinery it will be 7,500. So every year they are going to charge this much amount of depreciation. Okay. Now let's get to the example. First and foremost, what is important for you is to make the working notes. Working notes, if you make it properly, then preparing accounts will be an easy task, right? Now the working notes, I have prepared 4 columns for each machinery, right? First machinery, second machinery, third machinery, and fourth machinery. Now here on the year 2021, machinery was purchased. The first machinery was purchased for 1 lakh, second machinery for 80,000, and third machinery was purchased for 60,000, right? So at the end of the year, depreciation will be charged. What will be the rate of depreciation for first machinery? 10,000. Okay. Second machinery, we purchased the second machinery on 1st of October, right? So we use that machinery for 6 months. So the depreciation will be charged for 6 months. So 8,000 into 6 by 12 in the first year. Okay, in the first year, for half of the year, we are going to charge depreciation. So in the first year, depreciation charged will be 4,000. And the third machinery, which was purchased for rupees 60,000, was used for only 3 months, Jan, Feb and March. Okay, so for the whole year the depreciation amount is 6,000, but it was used only for 3 months, so the amount of depreciation will be 1,500. Now the book value of all these machinery on 1st of April 2021 will be how much? 90,000, 76,000, 58,500. Okay, I passed this entry, machinery account debit to bank account. We purchased 3 machinery at different point of time. Okay, done. Then I created a provision for depreciation account. I provided depreciation for all the 3 machinery. Entry, depreciation account debit to, at the end of the year, minded depreciation is charged. So at the end, 31st of March, I'm going to charge depreciation and going to create a provision for depreciation account. So depreciation account debit to provision for depreciation for the 3 machinery, it is 15,500. I carry forward this balance to the next financial year. Next financial year, what is the book value of the machinery? 90, 76 and 58,500. And in the next year, 21-22, nothing has happened. No purchase, no sale, nothing, right? So again, I'll charge depreciation for the whole year for all the 3 machineries. 10,000, 8,000 and 6,000. Now you have to be mindful that here it is SLM basis, straight line method. So the amount of depreciation will be the same for its useful life, right? If it is WDV, then on the written down value you were supposed to charge depreciation, right? Clear? Now the book value is on 1st April 2022 is 80,000, 68,000 and 52,500 for the three machineries. We provided for depreciation account debit to provision for depreciation 24,000. Okay, now the main part come, right? In the next year, that is 22-23, we are purchasing initially for the in the first month we are purchasing a machinery. Okay, what will be the entry? Machinery account debit to bank account. We purchased a machinery for rupees 75,000. This is the third year, we mentioned it over here, right? Now in the mid of year, on 1st of October 2022, we are selling our first machinery. What we will do? We will create an asset disposal account, right? Whatever whatever price we have purchased it, whatever depreciation we have charged it, at what price we are selling it, and whatever profit or loss we are going to incur on that particular machinery, we are going to record it in the asset disposal account. So on 1st October 2022, first machinery was sold for rupees 72,000. So the book value on 1st April 2022 was 80,000, right? For 6 months we used that machinery. Okay, so we are going to charge depreciation on it. Okay, so for 6 months, for the full year it is 10,000, for 6 months it will be 5,000. Okay, we are going to charge depreciation account will be debited, right? What will be the book value on 1st October when we are selling? What is the book value? 75,000. We sold it for rupees 72,000. Okay, the machinery's value was 75,000. We are selling it for 72,000. So we are incurring a loss of rupees 3,000. Right? Understood? Now we will make an asset disposal account, that is machinery disposal account. First we need to transfer the price at which we purchase that asset. Okay, and we need to close that particular machinery account from the whole machinery account that we have prepared. What will be the entry? This machinery account we are closing it and we are transferring it to the machinery disposal account. So entry will be machinery disposal account debit to machinery account. What price? Cost price. Okay, the price at which we have purchased this, cost of purchase 1 lakh rupees, right? Now till that date, how much depreciation we have charged? We have to deduct it. Okay, we need to close that provision for depreciation account also. So what was the rate of how much depreciation we charged in the first year? 10,000. Second year 10,000, and in the mid of the year we are selling, so 5,000. So in total 10,000 plus 10,000 plus 5,000, 25,000 is the accumulated depreciation on that particular machinery. Now we need to close that accumulated depreciation also and transfer it to the machinery disposal account. What will be the entry? Provision for depreciation account debit to machinery disposal account. We need to close this much amount. Okay, and we need to transfer it to the machinery disposal account. So provision for depreciation account debit to machinery disposal account 25,000, right? Now we sold that machinery. When we are selling, what is the entry? We get money, so bank account debit to machinery disposal account. Machinery disposal account 72,000. Now there is a loss on sale of machinery. It was for 1 lakh. There was a provision for depreciation 25,000. The book value was 75,000. We sold it for 72,000. There is a loss. Where we will transfer this loss? To profit and loss account. So profit and loss account will be debited. Expenses and losses will be debited. So profit and loss account debit to machinery disposal account, and this machinery account is closed, right? The first machinery that we purchased, that particular machinery account is closed. Done. Now what happened? We sold the second machinery also on 31st of March 2023. That is when the year ends. Okay. What was the value of that machinery? 68,000. At the start of the year, it was 68,000. For the whole year, we used that machinery. We charged the depreciation for the whole year, that is 8,000 we charged, right? What was the book value as on 31st of March 2023? It was 60,000. We sold it for 65,000. Book value was 60,000. We sold it for 65,000. What happened? We gain a profit of rupees 5,000. We need to show it in our books, in the accounts, in the ledger accounts. What we need to first do, we need to close that particular machinery account and transfer it to machinery disposal account. So machinery disposal account 80,000. Whatever depreciation we have provided, we need to close that accumulated depreciation and transfer it to the machinery disposal account. We get its net value, right? So how much depreciation we charged in second machinery? 4,000 plus 8,000 plus 8,000. That is in total the depreciation charged on that machinery was 20,000, right? So now I need to close it. What entry I'll pass? Provision for depreciation account debit to machinery disposal account 20,000. Okay, and now I am selling that machinery for rupees 65,000. So what will be the entry? I get money bank account debit to machinery disposal account 65,000. Now the machinery's value was 60,000. I got 65,000. 5,000 is what? My profit. Where I will transfer that profit? To profit and loss account. So machinery disposal account debit, I close this account to profit and loss account 5,000. Correct? Clear? This is how I'll prepare the machinery disposal account. Now I need to close this provision for depreciation account. I need to charge depreciation on the third machinery as well as on the fourth machinery. The depreciation for third machinery will be how much? For the full year 6,000, and for the fourth machinery it is 75,000. Worth, like the cost is 75,000. We purchased on 1st April. That is, we are using the machinery for the whole year. So the full year the depreciation will be charged. So it is 7,500. So I will close my depreciation account. For the first machinery I charge depreciation, for the second machinery I charge depreciation, third and fourth. So in total how much depreciation amount is there in the depreciation account? 5,000 for the first, 8,000 for the second, 6,000 for the third machinery and 7,500 for the fourth machinery. My entry will be depreciation account debit to provision for depreciation. At the end of the year I'll close this depreciation account. The amount is 26,500. Okay, now I will carry forward this balance. How much balance I am left with? I'll be left with the balance of the third machinery and fourth machinery. If you want to cross verify, first do the total. You will get to know that the credit, it has having a credit balance 21,000. If you want to cross verify, add this amount 1,500 plus 6,000 plus 6,000 plus 7,500, it will be 21,000, because this is the accumulated depreciation of the third machinery and the fourth machinery. I closed here my machinery account. What I am left with the third and fourth machinery? Third machinery 60,000 and the fourth machinery 75,000. That is the machine I am left with. That is why I am carry forward the balance of 1,35,000. So that's how I will prepare my asset disposal account, right? I hope it's clear for you. Now we will go on the fourth part, that is when we add or extend any existing asset, right? So we have reached on the fourth part of this particular topic, depreciation, which is about the effect of any addition or extension to the existing asset. Now let's say I am having a washing machine, right? Every year I call the service person and get its service done every year, and he charged me a nominal amount. Fine. Now in the fourth year when he comes, he says, ma'am, this particular part we need to replace it, otherwise your machine will not work properly, it will stop functioning, or it will not give you that much effective result. So I said, okay, he get it, changed. Now that particular part which he replaced is not a part of the regular repair and maintenance, not a regular part of services which he do, but it is going to give me a benefit for its useful life or maybe beyond that, right? So that particular amount, what I need to do, I not consider it as a regular expense, as my revenue expense. What I need to do, I need to capitalize it, okay, and on that capitalized amount I am going to charge depreciation. Let's say I am having a machinery worth rupees 1 lakh, its useful life is 10 years. As per SLM basis, I'm charging a depreciation which will be 10,000, right? 10,000 depreciation charged in the first year, its value becomes 90,000. In the second year, this is the first year, second year I charged a depreciation of 10,000, its value is 80,000. In the third year, I call that to get it repaired done. He asked for repair and maintenance expense worth rupees 5,000, okay. He repaired it for 5,000, but there was something which need to get it changed, which I need to get it replaced. So for that he asked an additional amount of rupees. He replaced it and asked for an additional amount of 20,000. Now this 20,000 addition, now this part can be used for 10 years, can be used for 5 years, whatever its useful life is. Let's say its useful life is same 10 years. So on this I will charge 2,000, and on the machinery I am going to charge 10,000. So in the third year, okay, this is 70,000 and this will be 18,000 in total, okay. So in the third year, the rate of depreciation is the amount of depreciation is how much? 10,000 plus 2,000, that is 12,000. Okay, so in that particular year I will charge I will consider as an expense of 12,000 for depreciation plus 5,000 for repair and maintenance. So in my profit and loss account, how much amount I will charge? 12,000 for depreciation and 5,000 for repair and maintenance, that is in total 17,000. I am not going to charge the full amount, okay. This amount I need to capitalize it and I need it to use it for its useful life, okay. This part was comparatively easy. I hope you got it. The first part, the method which we charge for depreciation, straight line method, written down value method. Second part we discussed how we will show it in our books, okay. We will either charge it to our asset account or we will create a provision for depreciation account, right? The next part, that is on the third part, I discussed you about when we dispose of the asset and how we are going to show it in our books. If it's single assets, we will show it like in that particular asset account, but if there are multiple assets, we need to create an asset disposal account and we need to transfer that particular assets, the purchase price as well as the depreciation amount or whatever depreciation we have accumulated, we need to transfer it to that particular machinery disposal account, and then we will show its effect, whether there is a profit or whether there is a loss on that particular asset. And the fourth part that we discussed about is any addition or extension to the existing asset. Any addition or extension, we need to capitalize it. We are not supposed to consider the whole expense as a revenue expense. We will capitalize it and we will charge depreciation on that particular addition or extension. I hope you got it. This was the first part wherein I explained everything about depreciation. In my second video, in the second part, I am going to tell you about provisions and reserve. I just want you to practice a lot related to depreciation. The more you practice, the more easy it will be. I am saying this in my every video. What you all need is to practice, practice and practice. I hope I did justice to this particular topic. Thank you very much.